Today, you'll hear some names in the list of top 10 companies that you can invest to grow your wealth. And just a sneak peek in today's list, there is Apple, there's Coke, and there's another company that's not listed in US. If you're curious to find out, continue watching on. Hi guys, welcome back. Without further ado, let's start with number 5 on the list. And just in case you haven't seen previous episodes, I'll list them above because I've covered before from number 20 all the way to number 6. Number 6 is actually Amazon, but today you'll be hearing who is number 5 on our list. And that is none other than Coca-Cola, with the ticker KO. Why isn't the ticker CO? I'm also curious about it. But in any case, Warren Buffett is a big believer of Coca-Cola. Coca-Cola's brand, I don't need to describe any further to you. In fact, it was one of my case studies when I was doing my accounting module back in my university days. So let's deal off with a fun fact. Over here, you can actually see how to get free Coca-Cola for life. Buy 146 shares of Coca-Cola and you receive $240 per year in dividends. And if you divide that by 12, you realize that you have $20 per month to spend on Coca-Cola products. In any case, don't drink so much Coca-Cola, it's not healthy. And it's still okay if you're a shareholder because Coca-Cola owns more than their flagship brand. You see over here, they own mineral water brands. They also own Minute, which is actually quite commonly found in supermarkets. And though Coca-Cola has such a stranglehold on the famous drinks, it's actually created a moat whereby it's very difficult for anyone coming into the industry to really break their stranglehold on drinks being served in fast food restaurants and in supermarkets. The only real competitor to Coca-Cola is actually PepsiCo, and they've had this duopoly for the longest period of time. Looking at Coca-Cola's dividend history, you'll see that they've actually raised their dividends for 60 years and they've actually been paying that consistently. So there's actually no question whether there's any moat or not in terms of its business. And the safest assumption is that 20 years later, Coca-Cola and PepsiCo would still be around. My guess also is that they will still be roughly the same size. As of now, PepsiCo, which is listed as number 12 on our list, is slightly smaller in size but has done slightly better in share price over the last 5 years. PepsiCo is a little bit cheaper at 26 times price earnings, where Coca-Cola is 27 times. And they've roughly trended similarly in the last 5 to 10 years. So why did I rank Coca-Cola over PepsiCo? That's because I actually like Coca-Cola more. So if you are a Pepsi fan, too bad, but actually either of these companies have very strong business modes. So if we were to think in terms of investment proposition, what is being offered at 27 times price earnings? I've actually dug this up for you to see. Coca-Cola's average price earnings seems to be around 20 times. And at its most distressed after global financial crisis, it was at 8 to 9 times price earnings ratio. So 27 times could be a bit inflated. So if I were to look at Coca-Cola, I think it's better to wait for a better opportunity and look for other sources. And that's why we'll be moving on to number 4 on today's list, who is also a famous consumer brand. This company is slightly smaller than Johnson & Johnson and Procter & Gamble. It's also a FMCG, fast-moving consumer goods company. It is 3 times the size of Unilever. So what company is this? It is none other than Nestle. Now why do I rank Nestle so highly? That's because I like the brands also. Cocoa Crunch, Nescafe, and of course Milo. Now maybe I like coffee a bit more than Coca, so that's why I rank Nestle on number 4. But nonetheless, what we can all agree is that these brands that it owns is definitely inflation proof. If they inch up the price by another 20 cents, 30 cents, I guess we'll all still be buying. Now I have something to share with you here. Unlike Coke, which seems to be slightly overvalued, I think Nestle is fair if not slightly undervalued. Check out this historical price earnings ratio. You realize that Nestle is hovering usually around 20 times price earnings, correct? But if you look at what is the current price right now, you realize that Nestle is trading at 18 plus times price earnings ratio only, with a market cap of close to 300 billion. Nestle is the one that is listed in Switzerland, but if you're looking to purchase Nestle shares, you can actually purchase the ADR listed one in US. So what exactly is ADR shares? ADR is actually a certificate issued by a US bank that represents shares in a foreign stock. So it's actually a duplication whereby the share price performance mimics the original listing in Switzerland, so that if the share price appreciates, you also stand to benefit. So if you like to trade Nestle's ADR shares listed in US, simply look for ticker NSRGY. You see over here that the 5-year performance is very strong. The 1-year performance is where the opportunity probably presents itself right now. That's why the price earnings ratio is only 18 times. You actually see Nestle's balance sheet in quarterly and annual basis, and it's definitely a very sound company. So if you're looking to trade Nestle shares, check out our sponsor today, who is Weibo. I use Weibo myself. It's one of the lowest cost brokerages And if you're looking to invest in US stocks and ETFs, and not just that, right now they can even allow you to buy mutual funds at $0. If you are new to the platform, simply sign up with my referral links below. Any deposit with $2,000 and a trade in a stock, ETF or mutual fund will enable you to earn this $150 worth of cash vouchers. So again, sign up today with the referral links below. And let's cover on number 3. This company is the biggest company right now in the world. This brand needs no further explanation. This brand is also another of Warren Buffett's investments, Apple. In fact, Apple is Berkshire Hathaway's biggest holding right now. So if we were to recap, how I actually rank this list starts from, is this company having a very good long-term track record? Has it survived war recessions before? That will give us an indication how well it will do in this current recession climate. The second is this company still founder-driven? This company has a long history. It was of course founded by Steve Jobs. It's now managed by successor Tim Cook. Now, I've actually read Tim Cook's book before, The Genius Who Took Apple to the Next Level. It's a fantastic book, something that I'll also suggest for you. And indeed, Tim Cook has actually brought Apple to the next level by introducing more services, which I'll touch on it in a quick while. But before that, I have a quick story to share. iPhone has been a foundational piece for Apple's success. But this project actually started with a name, Project Purple. And that's because Steve Jobs hated what Microsoft executives were using. Bloomberg has once reported that Apple has actually spent $2.6 billion on R&D in the initial iPhone research phase. But as you can see from the charts over here, it more than repaid investors ever since 2010. iPhone sales is reflected in the blue bar over there. What we can realize, however, is that iPhone sales seems to have been stalling, correct? It hasn't progressed much since 2015. Each iteration of iPhone seems to be similar to this previous one, so iPhone can be seen more as a cash cow to Apple's overall revenues. The interesting part of growth for Apple seems to be coming from two places. The first is in wearables. Apple of course has its iWatch and also AirPods. So if we were to bring back up the chart on Apple's biggest revenue contributors, it is actually under the orange segment, Other Products. But what do we see slightly below that? That is services, correct? Do you know that Apple actually makes a lot of money? In fact, probably one of the biggest contributors moving forward. This segment is actually Apple Store, Apple Music, Apple Pay, Apple Care, Apple TV Plus, and Apple Fitness Plus. These fall into the category of Apple services. And for fiscal year 2022, Apple services actually contributed $78 billion in terms of revenue. Wow, so you can actually see Apple is evolving from its flagship product to having multiple other services that are very sticky. I will be covering Apple more in a future episode, so if you like content like this, smash or subscribe. There's something interesting about Apple that I'd like to share with you in a full tutorial. Not just that, I'll be covering number 2 and number 1 on today's list in a future episode. So again, smash or subscribe, get notified when that video is actually released. And with that, I have a last rounding point for you. In the last 10 years, Apple has actually reduced its share count by almost 40%. That is similar effect to paying out dividends because the company is buying back shares. Warren Buffett actually mentioned that its holding in Apple has actually increased from 5.39% all the way to 5.55% simply with Apple doing its own share repurchases. So the company is rewarding long-term shareholders well. Let me know your thoughts on how I've ranked them so far and let me know your preferred. And take a guess who is number 2 and number 1 on our list. Leave them in comment sections and I'll see you when it's released. With that, I'd like to invite you to some of my previous tutorials which I've covered number 20 all the way to number 6. So if you haven't seen them, check them out. Maybe it can inspire you further in your investment journey. With that, I'll sign off from here and see you there. Take care as always. Goodbye.